they were to revalue gold to the current market price, that would be $1 trillion windfall to the Treasury, and so on. But silver, I'm not sure the U.S. Has that much silver.
I don't think they've got. I mean, unless they've been acquiring in the last few weeks after they made it a
Or,
strategic reserve, I
or
don't think they have any. As you say, Mario, on the gold, if they were to revalue gold at a higher price through a little bit of accounting magic, they would be able to reduce the debt by the roughly $1 trillion that they would
yeah,
make by putting it at the new price. Of
or
course, it
they
would make
could
much
send, or they
make
could
it more
send
sensible.
check,
10,000 or 20,000, wouldn't it?
or they might pay a little bit of the debt off, but the rest they'll send checks to every American just before the election.
Great move. Yes.
Yeah, yeah.
Revalue gold at 20,000, take 1,000 of that and send it to every American.
The concept of revaluing the U.S. Treasury's gold reserves to current market prices, or even to a target rate of $20,000 per ounce, is being discussed as a nuclear option to address the sovereign debt crisis. Currently, America's 261 million ounces of gold are valued on the books at a statutory rate of just $42.22, a relic of the 1970s that hides immense potential liquidity. Innecco and Clive Thompson argue that marking this metal to market could instantly unlock a $1 trillion windfall, or exponentially more at higher valuation targets, allowing the Treasury to slash debt liabilities without traditional default. While the U.S. lacks a comparable strategic silver stockpile, having only recently designated it a critical mineral, the gold revaluation strategy remains a potent piece of accounting magic. This mechanism could, in theory, fund a massive wealth transfer, potentially issuing direct checks to citizens and fundamentally resetting the global financial ledger overnight. Now, we present the clips from Innecco and Clive Thompson's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Even in England, sometimes you can buy silver cheaper in one shop than the other. But I would say if Ireland didn't have as much silver, it would be more expensive over there. But don't know.
Well, in today's world, where we're not on a gold or silver standard, the prices are very different from one place to another. We all know that coming to Switzerland, it's very, very expensive to buy a cup of coffee or a McDonald's or whatever you like. But you go to some other countries and it's very, very cheap, comparatively
Yeah.
speaking. And that's a reflection of what one paper currency against another. But if we're all on a gold standard, I would have thought the prices would start to converge so there wouldn't be a difference.
I agree. It would all be based on weight.
Because the minute there's a difference, goods would move to take
Yeah.
advantage of the difference. It'd be arbitraged away.
Yeah, the only reason we have difference right now is that there's so much paper and fractional reserve trading of gold and silver, especially London and New York. But I think
I've
that's
heard
ending.
I've heard they're going to devalue paper because it costs too much. They're going to start printing it in ether now. It's going to be digits in the sky.
Yeah, well. Carlos, thank you for your super chat. Can silver go to $1,000 per ounce, or what price in 2026? Of course, it can go to 1,000. I don't know what price it's gonna go in. It's already trading over 100 in some places. Uh, I could see 200 easily.
Well, if manufacturers need the silver, and if it's not there, you can't stop the entire production line. If you're going to put, let's say, $100 worth, let's say 1 ounce of silver in a car, that's $100 perhaps nearly. So your car production line can't stop because you're missing 1 ounce of silver. So it doesn't matter whether that silver is $100, $50, or $200, or $1,000. Okay, if it's $1,000, the car will cost $900 more than it does today. But on a $50,000 car, it's not a big enough difference to say we'll halt the production line because we're missing 1 ounce of silver. They have to have it at any price.
Yeah. Uh, Someone is asking here, can you please comment on why U.S. balance sheet shows silver at $1.30 an ounce and gold at it's not 43 actually, it's 42.22. But anyway, well, that's the statutory price. They haven't revalued it. I mean, I've got the coin here. Where is it? Where's my silver? That's my silver dollar. That's about 0.777 of an ounce. And that's why, 1 ounce of silver is $1.29, I think. So they're still valuing it at the weight of silver. Gold, of course, it used to be $20.67 for 1 troy ounce. They revalued it in 72 and 73 to 35. No, sorry, in 1934 to 35, and then in 72 to 38, and in 73 to 42.22. Basically because they haven't revalued because the fiat dollar has been king, right? Everyone has wanted fiat dollars. It's been the major reserve asset. So they don't want to give gold and silver any attention. But now with the dollar going down in influence, they might have to revalue it. And especially with the fact that the debt is growing so much, Clive, if they were to revalue gold to the current market price, that would be $1 trillion windfall to the Treasury and so on. But silver, I'm not sure the US has that much silver.
I don't think they've got. I mean, unless they've been acquiring in the last few weeks after they made it a
Or
strategic reserve, I
or
don't
ma-
think they have any.
or maybe they hold it through JP Morgan because JP Morgan is the agent bank for the US Treasury. Maybe that's the big, who knows?
But as you say, Mary, on the gold, if they were to revalue gold at a higher price through a little bit of accounting magic, they would be able to reduce the debt by the roughly $1 trillion that they would
Yeah.
make by putting it at the new price. Of
Or
course, it
they
would make
could
much
send or they
make
could
it more
send
sensible than
check
10,000 or 20,000, wouldn't it?
or they might pay a little bit of the debt off, but the rest they'll send checks to every American just before the election.
Great move. Yes.
Yeah. Yeah.
Revalue gold at 20,000, take 1,000 of that and send it to every American.
Ryan Morosi, do you think the increase in the price of silver is a planned event, or did this price action happen as a true market function? I think it's the market. The market always wins. Uh, and the reason why it's exploding so much, it took 45 years for silver to retest, to break through 50. And now in the last, let's say 4 or 5 months, it's almost doubled from 50. I think it shows that, yeah, manipulation doesn't work. I know they held it there for a very long time, but eventually the real world takes over. And what do I mean by that? Well, the real world where people want real physical silver, that beats paper every time, doesn't it, Clive? And
It For the last 4 or 5 years, we've had the silver production below the silver consumption by the electronics industry and others. So, yes, for many years, silver supply exceeded the demand. So those silver stocks were building up above ground. 4 or 5 years ago, it flipped. And that gap now, the deficit in silver has been getting bigger and bigger year by year, with the result that those silver stocks above ground are starting to diminish. So as they diminish, people become more and more, those who are still holding onto those silver stocks become more and more reluctant to sell. But nothing has changed in the supply and demand. The demand isn't going to go down. There's no reason why it could. I mean, you can't stop making an iPhone because the silver costs maybe another 5 cents of silver in the iPhone. So the silver demand is not going to go down, and the production cannot go up because it takes a decade to bring on new mines.
yeah, I know it's a really big problem, and that's why, yeah, that's why we're going to continue to see, I think, the price accelerate higher. The sovereign van, uh, have you seen the cup and handle on the 1 month and 6 month? Does the cup and handle indicate price suppression? Sometimes it does, but do you mean that for silver or gold? I don't think they've been able to suppress the price that well anymore. That game is ending.
The industrial need for silver creates a price-agnostic environment in which manufacturers must secure inventory regardless of cost. In a $50,000 vehicle, an increase in silver prices to $1,000 per ounce adds roughly $900 to production costs, a negligible figure that will not halt assembly lines. This inelastic demand is colliding with a structural deficit that has persisted for 5 years, rapidly depleting above-ground stocks that took decades to build. Simultaneously, the statutory undervaluation of sovereign reserves offers a potential reset button for monetary policy. With U.S. gold officially booked at a mere $42.22 per ounce, a revaluation to market levels, or a strategic target of $20,000, could instantly generate trillions in equity to offset national debt. As the paper suppression mechanism fails to address real physical shortages, the market is pricing in both the exhaustion of available silver and the inevitable devaluation of fiat currency. Let's get back to the interview.
Everybody wants a tangible asset like silver, and you find you can't get it at all because the banks are shutting the doors to stop you getting it, and there's all the gold and silver shops aren't selling it, and your friends have all got there before you. I would say get the physical while you still can, because the time might come when you can't.
Yeah, and this guarantee of allocated, I know most institutions that do that are bona fide, but you know, you can't, it's difficult to trust 100%, especially now, Clive, that it looks like we have what Zoltan Pozar said like 4 years ago already. We've got natural re commodities warfare. The world's splitting apart, globalization's finished, and countries are trying to protect their natural resources. The West, the U.S., they've neglected exploring for minerals and producing them and mining them for 30 years because they let China do it all. And now they're realizing that, yeah, they're too dependent on China and there's a rush for it.
Yeah. So suddenly, large companies which need silver are wondering if their supply chain, which has been just in time, will still be available just in time, or whether they should be stocking up with a longer supply. So I think there's a worry, a growing worry by the consumers of silver, car companies, solar companies, and electronics companies, to say, how can we secure our supply of silver longer term? And some of them will be buying the futures and hoping they can get delivery. Perhaps they will, but others are saying, let's get it now.
Silver's coming back, not just because it's important industrially and militarily, and but also even central banks and sovereign wealth funds. Yeah, they're buying silver. It's becoming monetary again, which is very surprising. Not to me, because I think it will eventually be money again, along with gold. Well, it is, but it will be used as it. So I'm sticking to gold and silver. Is that the way you feel, Clive?
Yeah, from a I'm buying both, and
Yeah.
I'm not stopping, but I'm not selling. So I was in the shop trying to buy some a week ago, couldn't buy it because they had too many people.
Oh, is that the
And
one in Geneva that you
that's
had
right.
to
Yes,
wait a week?
yeah, I had to wait a week, but I didn't go back because I couldn't be in town on the day they wanted to make the appointment for me. And
Yeah.
I still haven't bought the gold and silver, which was I was basically trying to buy whatever they've got in the 2026 series of coins, whether it be from Australia, Spain, UK,
Mm.
wherever. So I'm not. There's absolutely zero plan of mine to sell, and certainly if I was going to sell, I'd be selling the paper stuff first rather than the
Yeah.
physical stuff.
So there's the chart of value of one gold mark in paper mark. So that's the price of gold in Reichsmark just at the end of World War One. And then this was when the Reichsmark collapsed and it was worth what's that? A trillion?
Million, billion, trillion, 1 trillion paper
Yeah,
marks.
yeah. So, and you look, and of course, this is over like 1, 2, 3, 6 years. This starts beginning of the century. So it's it's longer period, but the shape, the wave looks very similar, Clive, and it's called a fractal. And that's why when we broke this line, I think we took off, and it looks
Yeah.
very similar to this, doesn't it?
Your American chart looks identical to the German
Yeah,
chart. In
I
other
know.
words, when German inflation was just starting to, or just before it started to creep up, in fact, the mark was trading on the foreign exchange markets at ever higher prices, going from 50 to
Yeah,
100 in
yeah.
no time at all. And here we are, exactly the same chart of the United States with the same line you've drawn, where gold has gone from 2,000 to 4,000. And again, it looks like it's about to go parabolic.
Yeah, I think they also call it a crackup boom. And today I was playing golf this morning, and one of the guys I played with, he started talking to me. I know him already. I know him, and he said, "What's going on in the world? How come my pension is doing so well? The stock market is doing so well?" And I said to him, "Well, I think it's a bit of an illusion. I think it's all the money they're printing into the system." Because the economy is not doing well. And so, yeah, people don't realize they see their stocks going up. They think everything's fine. And I told them, you need to look at gold and silver because they're going up more than stocks. And that's a bad sign. And I'm not sure if he understood it, but yeah,
Well, let's try and break it down and make it simple. Just take the U.S. government alone, and of course, don't forget this is all Western governments. But every year, the U.S. government spends 2 trillion more than it collects in taxes. So where does it get that 2 trillion from? It borrows that 2 trillion. So the government effectively gets poorer by 2 trillion every year, and someone else somewhere gets richer by 2 trillion. And what are they going to do with that money? They're going to put it in the stock market. They're going to put it in gold. They're going to put it in rare paintings. It doesn't matter. It's
silver.
got to go somewhere. It's got to go somewhere. And still, they've got to put it somewhere. They're not going to leave it in the bank unless they've got their
Yeah.
brains out of gear.
And the people who, unfortunately, the bottom 50% of the public who aren't as well off, they won't be able to protect themselves with assets because they're not earning enough to save and invest. And yeah, and that's the bad part of fiat currency and inflation. It's one of the reasons why I started this channel because I saw that happen in Brazil when I was growing up. You had people working hard and the money went nowhere, and it was because of that. They did it in spades in Brazil, and I think they're starting to do it in spades in the US and in Europe as well.
Well, especially the UK too. I
Yeah,
mean, from my what I can see, even people who are earning £100,000 a year in the UK, and you maybe got two of them working. The minute they've got kids, it's impossible to survive. Impossible. They can't. They're
yeah,
living hand to mouth.
yeah.
They can't save anything.
The financial charts are currently displaying a terrifying fractal pattern that mirrors the collapse of the German Reichsmark in the 1920s. The trajectory of gold prices in the United States has aligned almost perfectly with the historic Weimar hyperinflation curve, signaling that the economy is entering a crackup boom. In this final phase of a currency collapse, soaring stock markets create a dangerous illusion of prosperity, masking the reality that asset appreciation is merely a reflection of currency debasement, driven by annual deficits exceeding $2 trillion. This monetary flood is fracturing the just-in-time global supply chain, prompting a frantic rush by corporations and central banks to secure physical metal. They argue that while printed capital inflates the value of equities and luxury goods, the resulting cost of living crisis is decimating the real economy. Even high-income earners are now living hand-to-mouth as purchasing power evaporates, and acquiring physical gold and silver is an urgent defensive necessity before retail inventory is completely locked down. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.